Every empire tells you their money system will last forever. Every financial institution promises your wealth is safe with them. But history reveals a darker truth. The most powerful banking networks didn't emerge from governments or traditional merchants. They rose from warrior monks who discovered that controlling money was more powerful than controlling territory. In the year 1119, 9 French knights took vows of poverty and chastity, pledging to protect Christian pilgrims traveling to Jerusalem. They called themselves the poor fellow soldiers of Christ and of the Temple of Solomon. The world would know them as the Knights Templar. What began as a religious military order would become Europe's first international banking empire, a financial network so sophisticated and powerful that it would terrify kings and reshape the medieval world. But here's what most people don't understand about the Templars. Their banking revolution wasn't planned. It emerged from necessity, from the brutal realities of medieval travel and the crushing logistics of the Crusades. And the lessons from their rise and catastrophic fall still echo through every modern financial crisis, every bank collapse, every moment when institutions become too powerful for their own survival. The problem was simple, but deadly. Medieval Europe was drowning in violence and uncertainty. A pilgrim travelling from Paris to Jerusalem carried months of expenses in gold and silver coins. These weren't just travellers. They were walking treasure chests, prime targets for bandits, corrupt officials, and anyone desperate enough to kill for a handful of silver. The roads were graveyards of ambition, littered with the bones of faithful Christians who never reached the Holy Land. The Templars initially focused on what they were trained for: violence. They escorted pilgrims, fought battles, and built fortresses. But they quickly realized something that would change history. Dead pilgrims couldn't complete their journeys. Robbed pilgrims couldn't fund the Crusades. The real enemy wasn't just Muslim armies. It was the financial chaos that made every Christian expedition a gamble with death. So the Templars did something unprecedented. They began accepting deposits of money and valuables at their strongholds in Europe, issuing official letters describing exactly what each pilgrim had deposited. These weren't just receipts. They were promises, backed by the military might and religious authority of an order that answered only to the Pope himself. A pilgrim could deposit silver in Paris and withdraw the equivalent value in Jerusalem, all for a modest fee. By 1150, the Templars had accidentally invented international banking. Their original mission of guarding pilgrims had evolved into guarding their wealth through an innovation that seems obvious now but was revolutionary then: letters of credit. These documents allowed pilgrims to travel light while their wealth travelled safely through Templar networks. No more gold-heavy purses, no more desperate prayers at every river crossing, just a piece of parchment that could unlock funds anywhere the Templars had a presence. But the system worked too well. Word spread beyond pilgrims to merchants, nobles, and eventually kings themselves. The Templars found themselves managing not just individual deposits, but the treasuries of entire kingdoms. King John of England stored his crown jewels in the London Temple. Louis VII of France borrowed so heavily from the Templars to finance his crusade that he nearly bankrupted the entire order. The French royal treasury was effectively outsourced to warrior monks for nearly a century. The Templars weren't just holding money, they were creating it. They developed sophisticated services that wouldn't look out of place in a modern bank. They offered loans without interest, which was technically required by Christian law, but they found creative ways to charge fees through currency exchange rates and administrative costs. They provided safe deposit boxes, managed estates for nobles travelling to war, and even offered early forms of investment banking for major construction projects. Their network stretched from London to Constantinople, from Paris to Jerusalem. Every major city in Europe had a Templar presence, and every presence was connected to every other through a communication system more reliable than royal messengers. They had their own ships, their own roads, and their own laws. Within their walls, Templar law superseded local authority. They were becoming a state within states, a financial empire that transcended national boundaries. The sophistication was staggering. A merchant in London could arrange payment to a supplier in Venice without ever moving physical coins. The Templars would handle the currency exchange, manage the timing, and guarantee the transaction. They were creating the first truly international monetary system centuries before anyone understood what that meant. But power like this creates enemies. Every king who borrowed from the Templars owed them not just money, but acknowledgement of their authority. Every noble who deposited wealth with them was admitting that warrior monks were more trustworthy than royal treasuries. Every transaction that flowed through their network was a reminder that the Templars had become indispensable to the European economy. The more successful they became, the more dangerous their position grew. They were accumulating wealth faster than kingdoms, wielding influence that threatened traditional hierarchies, and operating with an independence that made monarchs nervous. They had solved the problem of medieval finance so completely that they had created a new problem. They were becoming too powerful to tolerate. And in the early 14th century, that power would make them the target of the most ruthless financial destruction in medieval history. By 1307, King Philip IV of France was drowning in debt. The Templars had become his primary creditors, holding loans that represented a crushing burden on the French crown. But Philip wasn't just any debtor, he was a king who had discovered that the most effective way to eliminate debt wasn't repayment. It was elimination of the creditor. On Friday, October 13th, Philip struck with coordinated precision. Across France, Templar knights were arrested simultaneously in dawn raids. The charges were heresy, blasphemy, and corruption. But everyone understood the real crime. They had become too wealthy, too independent, too powerful for any king to tolerate. Philip had turned their strength into their weakness, using their centralized structure to destroy them in a single, coordinated assault. The confiscation of Templar assets wasn't just theft. It was financial warfare on a scale Europe had never seen. Centuries of accumulated wealth, property, and investments were seized overnight. The international banking network that had taken 200 years to build was dismantled in a matter of months. Deposits vanished, loans were cancelled, and the sophisticated financial instruments that had revolutionized medieval commerce became worthless paper. But the destruction of the Templars created a vacuum that couldn't remain empty. Europe still needed banking, still required international credit, still demanded financial services that no single kingdom could provide. The demand that had created the Templars didn't disappear with their execution. It simply migrated to new hands, new cities, and new systems that would prove even more sophisticated than what the warrior monks had built. The centre of European finance shifted south to Italy, where merchant families in Florence, Venice, and Genoa had been watching the Templar experiment with great interest. These weren't warrior monks bound by religious vows. They were profit-driven entrepreneurs who understood that banking was business, not crusade, and they were determined to avoid the political mistakes that had destroyed their predecessors. The Italian banking houses learned the crucial lesson from Templar destruction: never become so powerful that kings fear you more than they need you. Instead of building military fortresses, they built economic relationships. Instead of claiming independence from royal authority, they made themselves indispensable partners. Instead of concentrating power in a single religious order, they diversified across competing family dynasties that could survive the fall of any individual house. The Medici Bank emerged as the most successful heir to Templar innovation. Founded in Florence in 1397, it would eventually grow larger and more influential than the Templars had ever been. But the Medici understood something the Templars had missed. The secret to surviving as a financial power wasn't military strength or religious authority. It was making sure that your success served the interests of those who could destroy you. The Medici made themselves the bankers of the Pope, managing Vatican finances and church revenues across Europe. They financed trade expeditions, funded artistic projects, and provided loans to nobility. But unlike the Templars, they never positioned themselves as alternatives to royal authority. They made themselves essential servants of power rather than competitors to it. Their branch network eventually stretched across Europe, from London to Constantinople, operating with a sophistication that surpassed even Templar efficiency. By the 1440s, Medici branches were processing international transactions, managing currency exchanges, and providing credit services that connected merchants from the Baltic Sea to the Mediterranean. They had recreated the Templar financial network without the military infrastructure that had made the warrior monks so threatening. But the Italians weren't the only ones learning from Templar innovations. In Northern Europe, the Hanseatic League was developing a different model entirely. Instead of centralized banking houses, they created a confederation of merchant cities that shared risks, profits, and power. Hamburg, Lübeck, and dozens of other cities formed a trading network that dominated Baltic commerce for centuries. The Hanseatic League understood that the Templars had failed not because their financial innovations were flawed, but because they had concentrated too much power in too few hands. The League distributed authority across multiple cities, ensuring that no single point of failure could destroy the entire network. When one city faced political pressure, others could continue operating. When one trade route closed, alternatives remained open. Their success was built on standardization and cooperation rather than centralized control. Hanseatic merchants used common weights, measures, and legal codes across dozens of cities. They established trading posts from London to Novgorod, creating a commercial network that moved goods, capital, and information across thousands of miles. But unlike the Templars, they never challenged royal authority directly. They simply made themselves too valuable to destroy. The legacy of these three financial networks, Templar, Italian, and Hanseatic, would shape European development for centuries. Each had learned from the failures of their predecessors. Each had adapted to political realities that the warrior monks had ignored. And each had discovered new ways to concentrate and distribute financial power without triggering the destructive backlash that had ended Templar dominance. But the fundamental tension remained unchanged. Financial networks that grew powerful enough to transcend national boundaries would always face the same choice that had confronted the Templars: serve power or challenge it. Those who chose service might survive and prosper. Those who chose challenge would face the same fate as the warrior monks who had died in Philip's dungeons, victims of their own success. From warrior monks to merchant princes to trading confederations, the pattern is unmistakable. Financial networks rise, accumulate power, and face the eternal choice between service and sovereignty. The Templars chose independence and were crushed. The Medici chose partnership and thrived for centuries. The Hanseatic League chose cooperation and outlasted empires. But here's what every modern banking crisis, every financial collapse, every moment of economic uncertainty teaches us: the game never really changed. Today's central banks, investment houses, and global financial institutions face the same fundamental tension that destroyed the Templars 7 centuries ago. Grow too powerful and you become a threat to the very governments that enabled your rise. Remain too weak and you become irrelevant in a world that demands sophisticated financial services. The Templars didn't just invent international banking, they discovered the most dangerous truth in finance. Money is power, and power always makes enemies. Every institution that controls the flow of capital eventually faces the question that Philip IV answered with fire and sword: who really rules, the king or the banker? That question echoes through every crisis today. When banks become too big to fail, when financial networks transcend national borders, when monetary systems operate beyond governmental control, we're witnessing the same forces that built and destroyed the first international banking empire. History doesn't repeat, but if you ignore its lessons, it will crush you all the same. The Templars learned that the hard way. The question is, will we? If this opened your eyes to how power truly moves through money, hit subscribe. The game began centuries ago, and we're still playing by their rules.